U.S. nat gas futures have experienced a third consecutive session of declining prices. This downward trend is a response to the anticipated prolonged warm weather, leading to reduced demand for heating fuel. December natural gas futures have registered a 1% decrease, indicating a bearish sentiment prevailing among traders. The overnight data maintains a cold shot sweeping across the Midwest and Northeast Friday-Sunday, with highs of 30s and 40s, as well as cooler air sliding down the plains into Texas. This will bring a bump in national demand to near seasonal levels as overnight lows drop into the teens to 30s over much of the northern and central U.S. However, warm high pressure is still expected to strengthen and expand to cover most of the U.S. November 14 to 20 for a return to widespread above normal temperatures, especially so across the Midwest and where record warmth is likely due to very limited coverage of highs into the 30s. Nat gas production has been on the rise in November, following a record high in October. Additionally, there is currently about 6% more gas in storage than is typical for this time of year. Across Europe, the substantial gas stockpiles are starting to push prices down, notably affecting the delivery costs for January 2024. These inventories currently exceed the typical seasonal levels, primarily due to the mild autumn and robust futures prices that are discouraging industrial consumption while promoting the import of LNG. The nat gas market finds itself in a bearish state, primarily influenced by unseasonably warm weather and elevated production levels. Despite inventories reaching record highs, the direction of nat gas futures hinges significantly on the upcoming winter's temperatures and how they affect both demand and pricing trends. From a daily technical viewpoint, nat gas is currently seeking support just below the 200-day moving average. The 50-day moving average below is significant support now as it covers a longer time frame. It may take a few more days for gas to complete its downward trajectory, and if it manages to settle above the 50-day moving average, this could be an initial sign of a potential uptrend resumption. Overtaking $3.15 will signal the return of buyers. If this move can overcome the $3.20 resistance and generate enough upside momentum, then look for a near-term rally into $3.40. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.